to the Indigrid Trust Q3 FY2024 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jiten Rushi. Thank you and over to you, sir. Hello? 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 Mr. Jiten Rushi? Hello? Ladies and gentlemen, the lines for the management has got disconnected. Ladies and gentlemen, thank you for patiently holding. We will now hand over to Mr. Jiten Rushi. Over to you, sir.
Thank you, Viren. Good evening, everyone. On behalf of Axis Capital, I am pleased to welcome you all for the Q3 9 months FY24 earnings conference call of Indigrid Trust. We have with us the management team represented by Mr. Harsha, Chief Executive Officer and Whole-Time Director, Mr. Naveen Sharma, Chief Financial Officer, Ms. Meghna Pandit, Chief Investment Officer, and Mr. Satish Talmale, Chief Operating Officer. We will begin with the opening remarks from the management, followed by an interactive Q&A session. Thank you, and over to you, sir.
Thank you, Jiten, and thank you, everyone, for joining the call today. As we have followed in the past, we'll go through the presentation, and in the end, we'll keep question answers. To reiterate and start with slide number 3, where we are talking about our vision remains to become the most admired yield vehicle in Asia. We believe we can do that by ensuring a business model remains focused on long-term contracts, low operating risks, and stable cash flows, focus on value-accretive growth, and offer unit holders predictable distribution while following an optimal capital structure. Following these principles, on slide number 4, this is a quick snapshot of as our portfolio looks today. We are present across 20 states and 1 UT, across 80 different revenue-generating elements, which includes around 46 lines, 13 substations, and overall 555 megawatt of solar power projects. On our transmission side, most of our assets remain perpetual assets. However, the residual contractual period for the first tariff is 26.5 years, and the solar is approximately 18 years of average residual contract. On slide number 6, coming to the quarterly highlights, this quarter has been a very exciting quarter. In this quarter, we have won 2 greenfield ISPS transmission projects with approximately total capex outlay of about 1,000 odd crores. Both these projects are run through TBCB mechanism and will be developed on BOOT basis, for which we'll have a concession period of approximately 35 years after COD. Second, on the best power front, we signed the agreements for the first utility-scale battery energy storage bid that we had won, and the agreements for that, which is called Battery Energy Storage Purchase Agreement, has been signed and executed with BSES Rajdhani for a capacity of 20 megawatt and 40 megawatt hour in New Delhi. We also signed share purchase agreement with Renew Solar Private Limited, which is to acquire 300 megawatt of AC capacity of solar project for an enterprise value of approximately 1550 crores. Along with the asset growth, we have also raised 670 crores through institutional placement in the last quarter, which was largely subscribed by long-term unit holders, and which totals our last year capital raise put together approximately 1,070 crores of unit capital in the last 9 months. The internal restructuring process, which we took approval from unit holders to reduce legal entities and operations, simplify operations for corporate structure and efficient operations, that is underway, which will substantially reduce the at present legal entities, which are 38, which we are operating. On the financial side, Q3 FY24 revenue and EBITDA has both witnessed 28% and 27% year-on-year growth on the back of the acquisition that we did in this financial year. Q3 FY24 EBITDA includes first full quarter of revenue from Virit assets, which is why we had a jump in the EBITDA performance. On the collection front, Q3 FY24 collections for transmission assets were at 94% and solar assets at 111%. Our quarterly DPU continued at 3.55 rupees a unit, which is on track to meet our FY24 revised increased DPU guidance of 14.10 rupees a unit. Our AUM at approximately 26,700 crores, with our net debt to AUM at 61.6%, which keeps substantial headroom for further growth. On the operating side, our operating performance was at 99.68%, and the solar CUFAC remained at 18.9%, including all solar projects put together. And you'll be happy to know that we won the IT Project of the Year India Award at Asian Power Awards for our Indigrid initiative, which was to digitize our entire asset management. With this in line, we were able to achieve superior total returns, sustainable increase in DPU, and maintaining stable operations. Going to slide 7 on industry update. Peak demand as around 213.5 gigawatt for Q3. Year-on-year power demand has witnessed increase of 10%, while the quarter-on-quarter consumption has come off, but year-on-year still remains higher. In general, broadly, we have seen substantial amount of trust from government on the sector. The key development or noteworthy development in the sector that we operate in, the transmission sector is looking at almost 3,000 billion for the power transmission segment between 2020 and 25. Based on the upcoming tenders and for the already identified project, we are expected 2,200 billion rupees of expected capex in power transmission segment. MoP has also released National Framework of Energy Storage to adopt and create an ecosystem for development of energy storage. And as per NEP 2023, we are expecting the total storage capacity expectation in the country to be 400 gigawatt hours to ensure that the country meets its energy transition goals. We are pretty excited that with all the development on transmission and solar business, we would continue to get sizable profitable pipeline for our subsequent growth. Coming to the next slide on the operational performance of Indigrid. This quarter we focused on zero harm on HSE, no fatalities, no LTI, no FSE, one MTC recordable minor. On the performance side, as I said earlier, we delivered 99.68% of average availability. On solar generation was at 18.9% CUF with 229 million units. Our reliability remained at our targeted levels of trips per line of 0.11 and substation trips per element at 0.01, which are substantially lesser than comparable benchmarks. And we continued a prudent defect management and reliability-centered approach, enabling these lower trips. On the cybersecurity front, we have finished at ISO 27001 effort, and we are expecting the certification for us soon. In general, there is a consistent track record that we have continued for maintaining a superior availability. I would now invite Naveen to take through the financial performance. Naveen.
Thank you, Harsh, and good evening, everyone. We are on slide number 9. Another good quarter with robust performance as compared to the same quarter previous year. We have recorded a revenue and EBITDA of rupees 754 and 681 crores respectively, which translates into healthy 28 and 27% YOY growth. NDCF generated for the quarter was rupees 312 crores, and board has approved distribution of rupees 3.55 per unit, which translates into DPU growth of 7.5% on YOY basis. With this, FY24 DPU guidance stands at rupees 14.1. Coming on to collections for the quarter, it stood at 94 and 111% respectively for transmission and solar business. For 9 months, collection performance at entity level stands at around 100%. The DSO as of 31st December 23 stands at 63 and 88 days respectively for transmission and solar business, which reflects significant improvement in solar business, where DSO was 107 days a year ago. Coming on to next slide, number 10. DPU for the quarter is rupees 3.55 per unit. It will be distributed in form of interest, capital repayment and other income, which is rupees 2.95, 0.56 and 0.04 respectively. The outstanding units at the end of the quarter is 78.37 crores, and the gross distribution to all the unit holders at rupees 3.55 comes to rupees 278 crores. Record date for the distribution is Jan 31st, and tentative date by which the unit holder will receive the distribution is Feb 9th. NAV as of December 31st stood at rupees 130.1 per unit. Post this quarter's distribution, Indigrid would have distributed rupees 82.41 per unit, with a total distribution of around rupees 4,667 crores. On the right-hand side, we showcase the trend of distribution year-on-year basis, which is stable and scalable growth of 4% over the years. We are on track to meet the year's guidance on distribution of rupees 14.1 per unit. Coming on to next slide, number 11, which showcases the waterfall from our EBITDA to the NDCF generation and distribution. At an SPV level, we have a consolidated EBITDA of rupees 681 crores. Net of the finance cost, working capital movement, capex and taxes at SPV level, NDCF generated at SPV comes to around rupees 668 crores. The net of the trust level expenses, interest cost and tax, we have generated NDCF of rupees 312 crores in the quarter. In this quarter, we have replenished our reserves by rupees 34 crores, and closing reserve stands at rupees 337 crores, which is an excess of 1 quarter's DPU basis current guidance. So that's all from my side. I hand over to Meghna to take the subsequent slides. Over to you, Meghna.
Thanks, Naveen. Hi, good evening, everyone. I'm on slide number 12 on the balance sheet position. Indigrid continues to be a AAA rated entity by all the 3 rating agencies, and our average cost of debt at the end of the quarter stood at 7.6%. The cash balance, which includes one for the distribution for the third quarter as well as DSRA, stood at about 13.82 billion. The mix of debt in terms of fixed rate borrowings stood at about 79% and balance in the floating part. With the equity raise that we did and the debt that we paid in the quarter of about 1,050 crores, the net debt to AUM stood at 61.6%, leaving a significant headroom for future acquisitions. The EBITDA to interest coverage ratio stood at about 1.94 times. The pie chart that you see on the right-hand side talks about the gross borrowing of about 17,700 odd crores, which is largely 50-50 split in NCDs and bank loans, 52 on NCDs to be precise and 48 on bank loans. All have been subscribed by a variety of investors across mutual funds, insurance companies, retail HNI, and even on the bank side, the bank loans have been provided by PSU banks as well as private banks. The repayment or refinancing schedule that you see, the bar graph at the bottom of the chart, talks about how the schedule pans out over the next 10-12 years. FY24, as you can see, that with the debt being paid during the quarter, the balance amount for refinancing is very small, and over the next few years also, we have a smoothened curve in terms of refinancing to ensure that there is not more than 10 to 12% that comes up for refinancing in any particular financial year. Moving forward on slide number 13, we are talking about the risk-adjusted total returns to the investors. As you can see, Indigrid continues to be outperforming on a risk-adjusted basis, risk being provided through the beta. With the run-up in the equities, we are seeing a lot of equity indices providing slightly higher returns, but as I said, with risk adjustment, you can see that Indigrid is still outperforming both on the debt side as well as on the equity side. Moving forward on slide 14 in terms of the business outlook, on the portfolio strategy, our focus will continue to be on ensuring that these operations continue to be stable and distributions will also continue to be stable, obviously with looking at value accretive acquisitions. The Renew Solar Asset SPA that we executed, we are targeting to close this transaction in the coming quarter. On the greenfield side, the project Kalam, which we had won almost 18 months back, we are looking to achieve COD of that project in this quarter, as well as looking at focusing on the execution of the augmentation work that we have done across our existing assets, as well as the two new transmission projects that we won in the last month. Similarly, the battery energy storage system project that we won, we are also looking at executing that. Plus, continue to look at other greenfield bidding opportunities across transmission as well as battery energy storage. And with that, look at ensuring that we meet the DPU guidance of 14.1 for this fiscal year. Parallelly, balance sheet strength and ensuring that interest cost as well as tenors remain long enough remains a focus area for us, as well as maintaining adequate liquidity. Asset management, again, a very important part of our portfolio. So we are looking at maintaining minimum 99.5% availability across the portfolio and ensure we maximize the incentives, as well as look at bettering the O&M practices across the portfolio. Increasingly, our focus on the EHS and ESG practices across the portfolio are also gathering steam. On the industry stewardship is something that we proactively work with various industry bodies and the regulators to see how we can maximize the private sector participation in the electricity sector for both greenfield projects as well as the national monetization pipeline, and parallelly work on increasing the awareness and education about InvIT with various stakeholders. Moving on to slide number 50, this depicts the way on the back of value accretive acquisition, how we have increased the DPU and at the same time elongated the sustainability of that DPU. The various color bars that you see depict every acquisition that we have done over since the time we got listed, and with every acquisition, how we have increased the DPU as well as elongated the sustainability of that increased DPU going forward. I'll take a break here and we can move on the specific Q&A session, please. Thank you. Jiten, over to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Hi, Harsh. Congratulations on a good set of numbers. Just 2-3 questions. So one is, of course, we are hearing a lot on the solar and renewable side. At the same time, we are closer to the upper limits of what we would like to do in this segment. So, given all of that, do we have some sort of a overall AUM growth target for the coming year, given all these changes and the thrust on solar and renewable that we are seeing in terms of various news items? So that is question number one. Second is on the solar piece, again, you have mentioned some of the numbers like collection percentage, CUF, etc. So if we were to benchmark ourselves with the peers on the solar assets across various important metrics, if you can give some color on how does our asset look like compared to the peers in terms of some of the important matrices, given that we have now spent some time, developing these assets into our portfolio. And final question was that, what should be the sensitivity of our NAV to, let's say, every 25 basis point decrease in the interest rates?
Cool. Thank you. So I'll try to address in some sequence. So question number one, first, let me clarify. There is no special thrust on any particular sector, whether it's solar or battery storage or transmission. As we have said earlier, we do not work under a target of a particular AUM to be achieved. We believe that we are in a business, on one side utility, on the other side capital deployment and investments. So we like transmission, we like solar, we like battery storage equally. And however, the return thresholds may be different for different set of projects. So we don't have a particular goal of a solar percentage that we are chasing. We look to acquire assets which provide us superior return on a risk-adjusted basis, whether it's transmission or solar or battery storage. And depending on what is at offer in the market, we evaluate a particular transaction or bidding. So yes, we don't have a goal of a particular AUM, which I can say. We don't have a particular preference of solar over others. Yes, we have an overall cap. If we are at that cap, we'll not acquire incremental assets. So that's to answer the first one. And second one is a little more complex because while we have 555 megawatt and we acquire Renew, it becomes larger. They are spread across 16 to 18 sites. So to compare them, and they are of different vintage. Some plants are 1 year operational, some plants are 12-year operational. So it's not one number that probably we can just compare and share dispassionately with investors or otherwise. Internally, we do keep track of the nearby plants for each plant and how we are performing against them. But, it's, I would say, impossible to showcase 20 plant performance versus other 20 plants in different regions for us to really compare because it won't be apple to apple. So we are working on it. Let's say if we come across some simpler, transparent number to communicate that would be more appropriate because it's not a homogeneous set of plants, right? It is across country in different types. So difficult to provide, but to be honest, let's say this quarter, our performance was a tad bit lower than what we expected from the plants because this quarter there were a lot of cyclones in Western India, which is Rajasthan, and there were some rains in Southern India during the winter monsoon. So we lost some of the generations, but it wasn't something which was alarming. But I think we do keep track of plant by plant. But at a portfolio level, if we come across something suitable, we'll surely come. On the next question you had on NAV, unfortunately, there is no one simple answer, and because as the time passes, some of the assets lose value, right? For example, limited life assets like solar may reduce value, so there's dual impact. Also, cost of capital does not have a direct impact on NAV. There is in between a beta. So the formula is public. You can look at the valuation report. But for us to give a sensitivity table won't be accurate. But all the ingredients are there, right? How the WACC is calculated, how the beta is calculated is there on a report. I would suggest to build a model and probably bounce off if that works well. But for us to give sensitivity how the NAV will move won't be fair. Right? Sorry, I'm not able to help you, but all the data is available for somebody to construct. But that guidance coming from companies at per 25 bits, what's the impact won't be appropriate. So that's why we are refraining. But the data is there for you to create that.
Understood. Just a follow-up on the second question, which was related to the benchmarking of the solar assets. So, obviously we started this only meaningfully maybe a couple of years back itself, right? So when we started, then we would have envisaged a certain delivery in terms of operational and financial performance coming out of this segment. And we would have envisaged at a portfolio level, because in a way you are a portfolio manager as well, right, in terms of financial operational performance. So till now, have you been able to get something which is better than what we thought we would get a couple of years back, or we are at par, or we are getting, at the overall level something which is lower than what we had expected? So this just to get a sense on.
Yeah, I think that answer is simple. We are getting better than what we had expected, broadly, right? Including the FRV acquisition which we first did in 2019. The plants have performed very well, better than our expectations, both at a unit generation level, degradation level, and also, I would say, collections, right? So across parameters of technical and commercial, they have done very well. I won't say it is only to our credit, because the overall industry has also improved. Collections have improved for all. So there are many factors, but we are happy with the plants that we acquired and pretty good with the performance.
Understood. Thank you and all the best.
Thank you. The next question is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Hi, just going on to the first set of questions on solar assets. Especially in context of your AAA rating, your transmission assets are stable and they provide take-or-pay as long as you have availability, whereas solar assets have this issue of revenues depending on radiation patterns, etc. So to maintain earning stability, would you restrict solar assets to a certain percentage of total assets, or these variable income assets to a certain percentage of total assets? That's my only question. Thanks.
Yes. We plan to restrict approximately 25% to solar. That's the plan.
Okay. Great. Thanks. I guess that is in line with maintaining a AAA rating, right?
Yes. It's a linking with rating, commercial, security safety, all put together, right? There are variety of purpose, but yes, I think, rating plus, it's not, we are not working for rating, we are working for stable cash flows. So it's a mix of both, right? Rating might indicate that it is stable, but the underlying is that, yes, you do want to maintain a stable business. Having said so, to be honest, over the last 3 years, solar industry has seen substantial amount of improvement in both predictable generation as well as collections. But let's see how it pans out in the next few years. And eventually, we do believe that overall credit of central counterparties will improve. But for now, we are focusing on not more than 25%.
Fair enough. All the best.
Thank you.
Thank you. The next question is from the line of Saurabh from Avendus. Please go ahead.
Hi, thank you for the opportunity. Just one question. Recently, you have signed an SPA with Renew Solar Power, which is for the acquisition enterprise value of 1550. So how this funding would be planned, through debt or equity? And also, is there any other pending commitment from the past acquisition which needs to be met?
So to answer, it will be both. Renew acquisition has ECB, which can only be refinanced at SPV level at a fully hedged basis, which can only be refinanced in 1 year from now for regulatory reasons. So good part of the 1550 would remain same debt that is continuing. And we would be looking to fund it between our internal accruals and additional debt. We already have raised capital, as I mentioned earlier. So between these three sources, we'll be looking to close Renew. On the past acquisition, if you look at our balance sheet, there is an item of capex payables, which is largely around, certain earn-out of certain holdbacks of different acquisitions. That number comes to give or take around 150 to 200 odd crores across portfolio based on different deals. And most of the time it is back to back. So if we receive cash on certain upside terms, we have to pass it on to the sellers. Or in some cases, we have held back the money which will be paid to the sellers when certain conditions are met, like completed. So yeah, that number would be in the range of 150 to 200 crores.
Thank you. And what is the breakup of 1150? How much is debt and how much you would have to fund it?
Sorry, 1150?
The Renew Solar Power enterprise value is 1550. So how much you need to fund to us?
Yeah. Meghna, would you be able to answer how much is the ECB amount?
Yeah. The ECB is around 1,000 odd crores and balance would be full equity consideration.
Okay. Thank you. All the best.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you.
Thank you, and thank you all the unit holders for joining this quarterly call. It's been an exciting quarter, and we are looking forward to the year end and providing the guidance for the next year DPU. And as these positive movements continue, we'll continue to update you on the projects and further acquisitions that we do. So looking forward for your support. Thank you.
On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.